Hello friends, welcome to Business Learnings. In this video, we'll talk about IDFC First Bank and we will try to understand whether is it a good stock to make a long-term investment or it is just another bank. So let's try to understand that. So IDFC First Bank is a merger of IDFC Bank and Capital First Bank. So Capital First Bank was founded in 2010 by Mr. V. Vaidyanathan, and I'll talk more about this particular person in detail in the coming few minutes. And IDFC Bank, another entity, uh, it was going on for about 2 decades. So IDFC Bank, uh, it had a lot of exposure in infrastructure. It had given a lot of infrastructure loans. Capital First Bank, it was an NBFC, Capital First NBFC. It was an NBFC and established in 2010, and it has been focusing a lot on growing in the retail sector. So first, I'll tell you why retail sector is important. First thing, retail sector gives you more margins, and the losses are restricted in retail sector. If you give more retail loans, the chances that you will have a huge loss is way lower than if you give out corporate loans, because corporate loans are bigger, and even if one player defaults, there is a big hole in your balance sheet, in your income statement. So yes, retail loans are they are more default free, they are relatively less risky, and you have this diversification of risks which adds you to your benefits. So first thing is that. Second is, let's talk about the co-founder. So if you have watched videos of Mr. Ramdev Agrawal, he's one of the co-founders of Motilal Oswal. He says 90% is management. Anytime if you are analyzing any stock, 90% is about management, 9% is about industry and all, and 1% is about everything else. So management matters a lot. Warren Buffett also says that management is very important for a company. Corporate governance and management is very important when you're analyzing a stock. V. Vaidyanathan has an excellent track record. He worked at Citi, he worked at ICICI Bank, and he is credited for the growth of ICICI retail loans from ICICI retail sector from almost scratch uh, to big heights. So you can trust him with growing retail sector loans, retail sector accounts. Second, I'll just request you to do your research on and search about Mr. V. Vaidyanathan, listen to his videos as he talks about economy, as he goes on the streets of Mumbai, talks to taxi drivers, understands the problems of the customers. You know, any awesome product is built upon the pain points that are faced by the customers in that industry. Right? If an entrepreneur is able to capture that pain point, he will be able to address it properly. He goes on the streets of Mumbai, talks to taxi drivers to understand how do they take loans. He finds out that they are paying 50-60% interest on the personal loans that they take from unorganized entities. So this is kind of opportunity that we are talking about. There are a lot of people who do not have easy access to loans from banks, NBFCs, etc., and they end up paying 50-60% annualized returns, annualized interest. How much does a bank charge you? 15-20% at max personal loans. Like, so this is a big difference. There's a huge opportunity if all those people start coming to the banks for loans, and if after all the due diligence we are able to extend loans to those people, there is a huge growth opportunity, right? And that is what IDFC is focused on. IDFC Bank, First Bank, is focusing on, and that's why I think it's going to be successful in the long term. Next, yes, so we talked about the management, and that's why I have a very clear vision that this company is going to do well in future. Next is okay. Yep, we will talk about current account and savings account. So, the difference between, why does an NBFC wants to be a bank? NBFC wants to be a bank because for a bank, it's easier to raise funds. In banks, you keep your salary accounts, you keep your fixed deposits, etc. And the banks do not pay a lot of interest on current and savings accounts, just 3-4% of interest. Remember that. Compare that to NBFC. How much does it have to spend in order to raise loans? Well, it will raise loans from commercial papers. It will raise funds from mutual funds, other banks, and the interest rates will go as high as 7-8%. You can clearly see that if you have a bank, raising money for you is way cheaper than if you are an NBFC. If you can raise money at lower rates, you can extend loans at lower rates and still make a good amount of profit. That's why a bank is very important, and that was the vision of V. Vidyanathan, who had Capital First NBFC and he wanted to convert it to a bank, and that's why the merger between Capital First and IDFC Bank happened. Cool, so far so good. His plan is going as he had expected. Uh, Now coming to the next part about talking more about the retail loans now. Uh, in 2018 March, uh, these entities these entities had 90% of their loans on wholesale sector, distributor, or corporate sector. Just 10% of the loans were retail loans, right? As the time progressed, uh, the reports are as latest as September 2019. So just 1.5 years later, retail loans grew from just 10% of the balance sheet to 45% of the balance sheet. And while transitioning, the company wrote a lot of provisions for doubtful accounts, and that's why you are seeing negative profits for the recent quarters for the bank. But the good thing is that IDFC First Bank, it is not focusing on increasing the size of its balance sheet. What does that mean? uh, it means that it will not give more loans. It will not. Its loan book is about 1 lakh crore rupees, and it has been so for the past 1 year. It's not giving out more loans. It's just trying to convert corporate loans to the retail loans. Unless that happens, unless the retail loans hit their target mark of 70%, they are not unless the retail sector hits 70% of the total loan book, they are not going to grow their balance sheet. And this is important because if the corporates start defaulting as they are defaulting right now, and a lot of banks are, screwed up. Yes Bank being the prime example, it had 90% exposure in corporate sector. And see how it went down. So we see that as IDFC First Bank will gain more and more exposure on the retail sector, its risks will further get down, right? And that's how it is. You know, in the coming years, the profits will that's how be increasing in a gradual and a consistent manner. Now let's talk about, yes, we already talked about the loans segmentation. Let's talk about the NPAs, which are an important part of banking operations. So NPA is about 2% of the assets of IDFC First Bank. They are NPAs as per the latest quarterly results. We'll wait for one more week to get their December quarter results, but these numbers are from September quarter results of 2019, right? So yes, this was about uh, their NPAs. The NPAs are about 2% gross NPAs. Net NPAs are about 1%. And I'll tell you the good thing about NPAs. A lot of banks have been observed to underreport their NPAs. What does that mean? That means that RBI says that you should identify an NPA as soon as you understand that this account is going to be doubtful, or you will have problems recovering your loan amount from this particular account. You should declare it an NPA as soon as you find that. Most of the banks do not do that. They wait a long time. They keep it postponed. They postpone it, and you cannot postpone it forever. At some point in time, the loans, the corporates who have taken the loans, they are going to default because they are already suffering. And when they default, it takes hit on your income statement, and then everything is clear that so far you had been so far you had been underreporting your assets. And this is not the case with IDFC First Bank. It identifies all those doubtful accounts well in advance, and that's why you are seeing the negative profits in the past few quarters. They identify all those doubtful accounts, or they make all those provisions way before they actually happen. And that's why going forward in the future, when all other banks, if they end up suffering, if because they do not have to charge money from their equity, right? They do not have to charge money from their equity for making up the compensation for the gone loan accounts, sunken loan accounts, right? So this is the reason that I like this particular bank. Next, you should buy or you should sell, or what should you do in terms of the markets. Uh, just a disclosure, I hold the stocks of IDFC First Bank, and I keep on buying as long as it keeps on dipping. So yes, I'm extremely bullish on that. Now, based on your risk appetite, based on your research, and based on the advices provided by your financial advisors, uh, you can make your own decision. I presented my views, presented my opinion. Uh, okay, this video has been quite long. Thanks for watching if you have been watching so far. See you in the next video. Subscribe till then. Bye.